Hello, everybody. I've already mentioned in my Facebook as well as in YouTube and in my LinkedIn that I'll be delivering a session today. My 11th lecture series will be on the mutual funds. So, what is a mutual fund? Mutual fund is a kind of a investment vehicle, we can say, in technically, or it's a investment avenues for the investors in order where the investors can invest their money, and it is a conglomeration of many securities. So a mutual fund is actually that pools the money from the investors to purchase the securities, and the term is typically used in the United States, Canada, India, with a similar structure across the globe. So the mutual funds are often classified by their principal investment, that is money market funds, bonds or fixed income funds, or stock or equity funds or hybrid funds. Now, very important thing is to also understand that the funds may also be categorized under index funds, which are passively managed. I will come. What do you mean by the passively managed? And there are many funds like stock market fund, is index, bond market index. There is also an actively managed funds. So passively managed fund and actively managed funds, which seeks to outperform the stock market indices, but generally charge higher fees. Now, the primary structure of mutual funds are actually open-ended funds, closed-ended funds, and unit investment trust. Now, over long duration, what happens is these passively managed funds consistently outperform actively managed funds. Now, open-ended funds are actually purchased or sold to the issuer at the net asset value of each share at the close of the day in which the order is placed, as long as the order was placed within a specified period before the close of the trading. They can be traded directly with the issuer. The mutual funds have the in advantages and disadvantages to direct investing in the individual securities. The advantages of the mutual funds is that it includes economies of scale and also diversification, liquidity, and professional management. You might be knowing the term that the fund manager. The fund managers are the professional the managers who actually manage these kinds of funds, and we all know that these are huge amount of money which are pooled in the form of investment, and they are invested in the securities. So we need a professional fund management, a professional fund manager who is going to handle all these funds on behalf of the investors. Now, mutual funds are actually regulated by government bodies, especially in India. We have got SEBI, Security Exchange Board of India. In US, we call it Security Exchange Commission, SEC. We in India we call it SEBI. So these, and they have to before going for any kinds of mutual funds to seek the money from the investors, they have to require the published information, including the performance, the comparison of performances to the benchmark, the fees which is going to charge for the investment to be made by the professional managers, and the security held. Now, a single mutual fund may have several classes of shares for which the larger investors pay the lower fees. Now, hedge funds and exchange funds are not typically mutual funds, but they are actually meant for high net individuals. This is all for a kind information to all my friends that United States actually have the largest market for the mutual funds. They are having a something like 38 or 39 trillion funds which are actually managed annually in US. India is also an upcoming market for the mutual funds. Actually, in the United States at the end of 2024, 24% of the household financial assets were invested in mutual funds. So you'll be able to understand that 25% means a quarter of the household funds are invested in mutual funds. So the fascination for the mutual funds of the households is very important also. And another important thing is this: in India, there is also a growing importance of the of investing in the mutual funds, not only by the households but also by the corporate investors also. So from every time onwards, it is catching up with an importance of investing more and more in the mutual funds area. Now, if you see that what are the advantages of investment in the mutual funds, actually there is an increased opportunity for diversification, because if you invest in because if you directly engage yourself as an investor in the equity market, then it gets very difficult to order to study the each equity shares of a particular industry or the company as such. So if you hire any professional manager for that, then you have to pay the fees. So, in order to avoid all these difficulties and various compliances from the part of the investors, and also we have to keep ourselves informed all the time by looking into the newspapers, by magazines and net, and which is not possible for any individuals who are having their daily jobs or employment or business. So it will be very difficult for us. So in that case, what happens? The company came up with an idea of pulling that kind of money into the investment in the form of mutual funds, and the way the mutual funds, the money where the mutual funds are invested in the securities, they are chosen quite wisely, and there is an increased opportunity for diversification. Diversification is this: for example, the equity share can be invested, your money can be invested in the equity shares of companies like oil sector, it can be done in the information technology sector, IT sector, it can be done in the banking sector, it can be done in the insurance sector, financial sector, it can be done in the coal market area, it can be done in the oil market area, it can be done, the investment can be made in various industries, and also in various service sectors, and and also the diversified insurance sectors. So these are the areas where an individual cannot concentrate, where the professional fund manager who is actually actively engaged in this kind of process of investing the money of the investors, they can handle these things very wisely and professionally. Number one. Number two is this: the liquidity. That is the liquidity of the mutual funds. It is being estimated in the United States that the mutual fund shares can be redeemed at the net asset value with 7 days, but in the practice the redemption is much quicker. Redemption means you are going to get a matured value out of the investment that you make in the mutual fund. These are professional investment management, open-ended and closed-ended. There are many areas of mutual funds. There are many areas of mutual fund. For example, you need to understand what is the concept of the net asset value. We need to understand the concept of open-ended funds. We have to need to understand the closed-ended funds, and how the individual investors will perceive and motivate himself or herself in order to invest in the mutual funds. What are the areas that the investors is going to look, like the financial information, the assets and liability, comparison of the performance, and indices chart. So these are all the areas that which actually revolve around the mutual funds. We will all come up with a next series of lectures where we will discuss various intricacies of involvement of investment in the mutual funds. I'm just giving you a little bit of introduction that what is mutual fund is, the basic concept. Then we'll go into the deep, that how we are going to invest our hard-earned money, the money that we really earn through hard-earned, is to be invested in the mutual funds or any other modes of the instruments of the investment vehicle which are available not only in the capital market but also in the financial market. And the services and the convenience which is going to are helpful for the investors. There is also a very important thing: there is a government oversight. Means the regulations and the regulatory bodies are very strict for the regulations of mutual funds. It means you'll always see that during the advertisement of the mutual funds, they say that these are subject to market risks and you need to read the documents carefully. It means that obviously this is a kind of a disclaimer that they're issuing, but the thing is this, that they are highly regulated, and the government oversight by the various government authorities are being regulated, and they are watched very carefully. So our money is always at the safe hands. But it depends on the volatility of the stock market and the equity market also at the same time. We have to keep this in mind. So the thing is this, that the mutual fund is one of the most available opportunity for the investors who are going to invest not only in the bulk form but also in the SIP, the systematic investment plan. If you start investing 500 rupees or 1000 rupees every month, so it is also a kind of an avenues for the low level investors. There is also an opportunity for the high net worth individuals who are planning to invest in the mutual funds to get a good return out of this. So I end this by saying that there are more opportunity for investments in the mutual funds, and we will come up with various lecture series that the various intricacies which are involved in order to study from the perspective, from the investor the point of perspective, that what are the areas where we are going to look for and find out the best opportunity for investments in the mutual fund. Thank you very much for joining.